Good afternoon, everybody. This is Sharad Bhargav from Sathi Development Services. A very warm welcome to all of you who have joined this session. Today's session is session number 4 of our 5 sessions series. And as you remember, would know that this series is divided into 2 parts. We have completed part A, which was related to all that we needed to know about due diligence, um, especially organizational and financial. Uh, Today and the last session are, devoted to discussion on grant management. So, grant is something on which we either thrive or also sometimes survive, whatever. But that's, of course, the meat of all our activities, okay? The reason for our existence in a certain sense. I don't want to overemphasize it, but that's how it is. And we all chase grants. This session today is understanding some of the very critical components of what grant management is. We might not find the explanation to all this in law books or otherwise, and a lot of convention is playing out as far as this sector is concerned. Okay, convention meaning a lot of things have evolved as practice has evolved in this sector, although it might not have the statutory regulatory backing or uh, some kind of a way to validate that particular thing. However, as things stand and as things improve slowly, we have been seeing the government is working very hard. So, as far as the last week is concerned, there were several changes made in the FCRA rules and procedures, trying to streamline those procedures, given the somewhat tough stand that the government has been taking on FCRA. So they have actually come up with more accommodative steps. You might want to read that on Patrick, which is available. However, today's session is more specific to grants, and I want to only say that we will stick to this word called grant management for the next 2 sessions. The layout of the session. So, I would request that people who have done the first 3 sessions, please do go back and uh, the real, fruit of these 3 sessions would come by way of your having to either validate your due diligence status as far as your organization is concerned, or look at ways in which you can benefit from all that content to have a roadmap for yourself in terms of due diligence, because due diligence is precursor or one step prior or some steps prior to the actual award of a grant. So as we move towards grant management and its understanding, the one thing which is the prefix to grant management is due diligence, and that is part of the planning process as far as grant management is concerned. However, today's session will have 3 parts as far as the session for the layout is concerned, and these are all very important. First is what is grant and grant management, and the prerequisites and the reasons for what actually ensures that there's a good GMS, as we call it, the grant management system. So we will understand that. We will understand the fund accounting and fund types for the not-for-profit sector. Very, very important, because this is not something that you will find in any rule book, but that is something that is that we will try to cover as we have practiced it and trying to relate it to what work we do. And the third one, which is equally important, is costs and cost type. What is the meaning of cost? What are the types of costs for the not for profit sector? Because the cost and the cost types will then decide on how the budget has to be done. So these are broadly the 3 topics that we are going to cover as far as the session is concerned. However, let's begin and continue with our conversation in terms of the benefit of people who have already joined. So now these 3 parts I have divided into understanding grant and grant management. Second is understanding the funds and the type of funds that organizations deal with. You will hear various words about funds and grants, and therefore you must understand the interpretation, I would say, of these words, which is more important because they may not all be reflected in various statutes. And the third, of course, is cost. And again, a lot of convention and precedence and some kind of a continuation of what we have been used to is Mars what costs and cost types are for not-for-profit organization. The next session we will continue with costs and merge them into budgets, and then we will do a few more things in terms of tips for management of grants and things like that in the next session as continuation. Now, as far as a grant is concerned, is the word grant, okay? Now, it's basically an award. It's something that has been given to you uh, and by one entity to another entity. Okay, so we would call them grantors and grantees. Okay, donor or donee for a particular benefit, which is public benefit. Now, one must understand that this is a charitable benefit or a public charitable benefit or a public charitable purpose. So there is a particular public charitable purpose. We are talking mostly of charitable institutions, not really of religious institutions. But what I'm saying is that the grant is for an objective or a purpose. Let's understand that. Therefore, if there is a purpose, there is a condition, there is a restriction. Let's understand that these are words which will be coming up commonly in terms of our understanding of the word grant. So it's not meant only for being given by one entity to another. It's meant for a certain public good. Okay. Now, this public good is the purpose, and the purpose can be different. It could be women, child, it could be, environment, it can be anything. It could be gender, it could be public health, it could be, whatever. So there is a certain public good that is involved when we talk of grants, and these are normally given to charitable entities or not-for-profit organizations, as we call it. Now, these not-for-profit organizations or charitable entities basically are the ones which are actually set up as societies, trusts, and Section 8 company, as we would know. So, again, grant is not an automatic entitlement. So, it's not a matter of right as far as grant is concerned. It's not an entitlement. On the other hand, it's for an obligation to be discharged. Now, this is one thing that small medium organizations have to clearly understand. Grant is not an entitlement but an obligation, and therefore the word trust comes into this conversation, that grant is a trust fund because it's an obligation. Now, what's the grant? When I say grant is trust money, who are involved in this trust fund management business or the trust fund business? So when I talk to a lot of organizations, even the chief functionaries do not understand the distinction between something being their own and something being an obligation. And if you say you've got a grant, is this something that is your kind of your entitlement or your income? At times they are neither clear, at times they might think it is. And if that is the mental understanding of what a grant is, your actions will be governed by that understanding. So for everybody in the organization, a grant is something which needs to be discharged as an obligation. This is something that has to be clearly put into the heads of everybody who's there in in any organization. And at times there is a misnomer about this, and therefore, uh, your actions with reference to a grant that has been given as being considered as your own entitlement or as your income, it changes the entire color and the actions that follow as far as grant is concerned. Now, when we talk of grant as trust money, now is it written anywhere whether it's trust money? No law talks about it, but we are talking of the practical side of what grant management is. So you have the grantor, you have the grantee. Now, this grantee or your not-for-profit organization is basically the trustee for this grant money, okay, or the grant fund. Now, this trustee has a responsibility, I call it the fiduciary responsibility. It's a responsibility in terms of not only ensuring the safety of the grant funds, but also the intended purpose of the grant funds. Okay, both to two people. One is the grantor who has given the money, and the second is the beneficiary, or what is the third, player in this particular game, which is the target group, the target audience, the beneficiary community, whatever you might call it. So basically, this trust money comes from the word trust. And who holds the trust? The not for profit organization holds the trust money on behalf of both the grantor on the giving side and the beneficiary on the receiving side. So basically, the grant is the most critical piece of a not for profit organization or a grantee. Uh, Now, the grantor does not get any direct benefit, and the grantee doesn't get any direct benefit, because the benefit is for the community. There's no payback. Okay, so that the payback is not there to the grantee. It might be in the form of some coverage of costs. Okay, but it is utilized for the intended purpose of benefiting the beneficiary. So basically, what we are saying is that grantor and grantee are not in any way benefited. And this is the very peculiar or unique characteristic of grantor grantee relationship, which also would distinguish a grant from a normal exchange transaction or a normal sale or purchase transaction. And that has to be also very clearly understood, so that we have a clear distinction between grant and an exchange transaction, as you will see in the next slide. Every line that I am conveying to you has meaning and needs to be imbibed, actually. Okay. Now, so if the trust factor comes because there's no benefit, the benefit is for the ultimate beneficiary. uh, Now, the grant comes in different forms, as I've mentioned. What does it mean? That it can be uh, various ways in which it is packaged, and there could be restrictions in terms of time, in terms of usage, or there may be no restriction. And we will see each of these different forms of grants. You can call it voluntary contribution because they are called as different words in different laws, and we will see that. Don't worry. So, because the word grant as such does not have any mention or comprehensively covered under any particular law. Okay, so this comes in different forms. We will see the various forms of grants or funds, as we might want to call them, for not-for-profit organization. Again, nowhere mentioned in a single law or in a single compendium. That's for us to understand. And when there are discussions around the various forms or the various types of funds, we need to understand that, because the grant maker or the donor might talk a language which we need to know and understand. Okay, and it can come from different sources, so they can be in different forms and they can come in different sources. We had seen in session 1 what are the different sources for funding social sector investment, you remember, and we had seen a very rosy picture there. The government, which where the grants are actually called grants in aid, the retail investor, which is the individual, the corporates, and the foundations, which are family based businesses. We have also seen that these are the sources of grant funds in our country, and they might vary in terms of their size, in terms of their complexity, in terms of their coverage, but these are broadly what they are. We have seen corporates under CSR, individual giving under retail, family based businesses, foundations, and of course, I forgot mentioning foreign contribution. Okay, so they can be from different sources. I've actually foundation ke baad there has to be a comma and there should be a word called foreign. So these are the 5 ways in which we get grant funds for doing charitable work. Okay. Now, these are awarded directly or through a competitive process. So the grantor may want to award it directly to you by a standalone or a one-on-one relationship. And we had seen that when we were talking of due diligence. What are the methods for the donor-donee relationship to get established? The donor-donee relationship can get established directly on a standalone relationship basis, or it can be through a competitive process. So these are broadly the features of what a grant is for a not-for-profit organization. And grant is what we actually breathe grant. We do grants, we practice grants, everything is what is grant. But we need to understand the crux of what we are dealing with. This is not our money. This is a money which we hold and trust, is the end story for understanding and then applying your mind in terms of discharging your obligation under a grant. This is the end result. Now, what is the difference between an exchange transaction versus a grant? Very important to understand that. Because if you were, because these are two separate compartments, let's understand this. These are two separate ways of doing business. I call charity as business. So the charity is the not for profit way of doing business, and the for profit is the for profit way of doing business. The for profit is what is the exchange transaction. In simple language, exchange transaction means you are buying something in return for something. Okay, are grants like that? There's nothing like buying. This community is the community at large, not even identified, not even uniquely identified. They are all a universe of people whom we really do not know or cannot even identify. Okay, so it's important because when we talk about grants, we must understand that these are different from a sale purchase transaction. Now, if we go to the GST Act for India, which defines exchange transaction, okay, what is a taxable supply as it is called in the language of GST as far as exchange transaction is concerned? One is there is a supply of goods and services. Now, to a certain extent, that may be true even for a not-for-profit entity. There is a consideration, that is, there is a payment that is made for such supply of goods and services. And the third thing is that it is done in the course of furtherance of business. Now, when we look at these three conditions for being considered as an exchange transaction in India, then we find that they do not merit the same, that they do not, you know uh, uh, cover a grant transaction. Okay, a grant is not an exchange transaction because there are no specified beneficiaries involved in terms of exchange of goods and services. Okay, second thing is there is nothing in return. Consideration means somebody gives and somebody takes. That's nothing in return from the beneficiaries or the benefit or any benefit that is derived by the grantee. The grantee is the in between, the grantor, the grantee, and the beneficiary. None of them, there is a consideration. There may be a question of payment, definitely, between the grantor and the grantee, but there is no consideration in terms of being treated as an exchange transaction because there is no benefit. Okay, there's nothing in return that's given. That's consideration. And the third thing is grants are not in furtherance of business. You're not doing business, you are doing charitable work. Now, you need to understand each transaction that you do in order to distinguish between exchange transaction and grant. So I've said that understanding the above for grant contracts is very, very crucial. Otherwise, what happens is that contributions may be considered as exchange transactions. Okay, so you need to be very clear in terms of documentation, in terms of the connotation, in terms of the way the grants are set up or the contracts are set up, so that you do not fall in the definition of an exchange transaction, whereas actually it's a grant. And this is more so for CSR transactions or CSR allocations. Because then what happens is if you come within the exchange transaction purview, you also get attracted by GST, number one, if you cross the threshold, and number two, the TDS or the tax deducted at source, whether it's a consultant transaction or whether it's a contractual transaction. Now, as grants, we are not supposed to have any of this because we are not covered under the definition of taxable supply. And the last thing that I want to see is exchange transactions versus grant. We need to understand because we are a grant utilizing or grant implementing agency. And our charitable status is based on this assumption, this premise, I would call it. And this premise says that you need to implement grants, and that will decide whether your charitable status is there or not. Now, if you are not careful in terms of the distinction between exchange transaction and grant, you might go into the exchange transaction business, which can bring problems for your charitable status or your tax exemption status. Now, even in the income tax law, we know that some commercial transactions are permitted which are incidental to your main objects. And if there is commercial receipts, yes, that can be considered. Whether you can be out of GST will be based on your being eligible under the exemption notification. So you must know all that. But I don't think you should blindly accept any grant as coming within the purview of exchange transaction, because then it can put you into not only taxation problems but can question your charitable status itself. Okay, that can lead to cancellation of your tax exemption status. Now, if that happens, then basically you are not you have become a for profit entity, and therefore basically you will never be able to undertake charitable work. Now, what happens as far as grant management is concerned? So from the definition of grant, we now move to the grant management system. Okay, what does it cover? What does grant management system covers? One, it covers two players that we know: the grant makers, okay, the grantors, donors, the grant seekers, the grantee or the donee. We know that for sure. Okay, every one of us knows that. Now, the grant management system is basically the entire spectrum of grant management process. So, if you were to talk about grant management system or GMS, that includes identifying a particular opportunity, okay, which will be in line with the need that you can satisfy for the community. Okay, that's what has to be understood. Identifying a potential uh, funding source for addressing a certain need in the community for which you are set up. That is what is the idea of identifying. Then applying for, then you apply, and then you secure a grant. Then you, once you secure a grant, you'll adhere to grant conditions. And the last thing is the evaluation of the outcome based on the grant contract that was given to us. So there is an evaluation of outcome, which is the purpose for which the grant has been given. So all characteristics of this word grant are embedded in this grant management system. Now, the grant management system is in the form of a process, okay, which we call as the grant management life cycle. Now, a lot of us know that there is something called the grant management life cycle, but how many of us actually practice the concept of the process of grant management life cycle is the question. And that is why our delivery on from the day that we begin in the grant management process or in the grant management system, from identification to grant closeout, our journey is not that comfortable. Now, these are the grant makers and the grant seekers. The grant makers are creating the grant and the grant seekers are seeking grants. So I am the recipient, you are the prime, or you are the one who's actually giving it to us, and I'm the recipient. Am I automatically entitled to? No, I'm supposed to actually be able to secure a grant. Okay, it's not an automatic entitlement. Now, coming to the grant management life cycle, this is how the pictorial is actually, and all of us know that. The only problem is we don't practice it. So, how does the grant management life cycle? It has three major parts, and I'll show the three major parts, the components of those three major parts in the next slide. But we must call those three major components as pre-award, award, and post-award. Now, there's a lot of planning that gets involved, irrespective of whether we have actually, done the life cycle for a particular grant. So please remember, every grant has a life cycle. And that needs to be understood so that we are able to complete the grant successfully. Now, a lot of planning takes place. You know, the 3 sessions that we have done earlier, that's all planning. You have prepared yourself for due diligence. Now, if the due diligence comes for X donor, Y donor, Z donor, it might vary slightly in terms of, you know, the way it is laid out or the way it's conducted. But primarily, our planning will ensure that we are good to go as far as any donor is concerned. Our planning, our understanding of what we are, our understanding of what needs we can saturate, all that is the planning process. Now, a lot of clarity has to be there at the planning stage before we start venturing into the pre-award stage. As I said, the understanding of the need, the understanding of our objects actually fulfilling those needs, our capabilities, our capacities, our organizational direction, strategic, tactical, all that is very important in terms of the planning phase. Now, once we go in for the grant cycle for a particular grant, this is what is involved. So it's looking for an opportunity for for getting funded. Then you are applying for that. The applying will also have the due diligence process, but the planning is ensured that you are ready for the due diligence. The next is award. That is when you secure a grant. You have secured a grant not as a matter of right, but with a clear understanding with the donor in terms of the responsibility or obligation that you have. Okay. The next is the post award. So once you have got the award, the post award actually is in terms of the actual grant implementation or execution, as we will call it. And the last phase is what is called as closeout. Now, at times when we look at closeout, we do not give that same level of importance to closeout and closeout formalities, with the result that a lot of grants still continue to be keep open, remain open, and create a lot of problems over a period of time. So grant closeout is an equally important part of the post award stage for a grant, because the closeout will also decide whether the same donor after closeout will come back to you. And each of these stages, your people who are involved need to clearly understand what it means. This pictorial diagram is not for the sake of showing you a presentation, but it's actually for you to understand who will be there, where, and what each of them is supposed to do. So, as far as the cycle is concerned, I have then now made it into specific, you know, pieces. So the pre-award is, of course, the planning. So the need identification, your own SWOT. What is your strength? What is your weakness? Your is the opportunity and threat in terms of your organization. What is the due diligence preparatory? Once you have done that, you will scout for funding opportunities. Okay. So you will see which of the sources of grant funding is probably available. That's the new business development business or the fundraise business. Then the grant application is your part of the pre-award stage. So you now make an application, you submit the due diligence documents, because there is the eligibility and qualification requirement by the donor. Who is eligible for a grant? They will specify either whether it's a standalone relationship one-on-one or whether it is through a competitive process. The eligibility is specified. So in your application, you will have to justify your eligibility and your qualification for being able to deliver on the outcomes. So that's your bit of the pre-award. And the review is basically the donor side of evaluation of your application. Okay. So the grant application goes to the donor and it is with the donor for review. So back and forth, and you finally come to a stage where the donor, as we had seen in all the three previous presentations, now comes to a stage where it says, well, I would like to get into a engagement with this particular entity. That's where you come to the award stage. The award is award negotiation. So your application is reviewed and the donor comes back with various observations in terms of what they like, what they don't like, what they want to add, what you can do, what you may not be able to do. All that is the negotiation part, including the budget side. So a grant application will have the narrative, which is the program side, and it will have the financial, which is the budget side. So the grant negotiation happens, which is the award stage, because the donor has come to a conclusion that they will want to get engaged with you. Then the negotiation culminates in what is called as the award decision. Okay. Now the decision is that we now agree after negotiation that these will be the terms and conditions, and these terms and conditions then become part of the award notification or the award contract, as we call it, the grant contract. This is one of the most important documents as far as grant is concerned. And in the next session, we will see the various parts of a grant contract and what we need to understand from the various parts of the grant contract, instead of putting it in file and seeing it at the time when you are at closeout. The third, and that is why please plot all people who would be involved in this grant, in the grant management life cycle, who will be involved. On the right hand side you can plot these people will be involved, and all of them will be involved at some stage or the other. Your program people, your new business people, your finance people, your management people, all of them. It's not somebody's responsibility. As a grant seeker, it's an organizational responsibility, and I call it accountability. And we'll see what is accountability versus responsibility. Now, the post award, now it's very, I will only explain all this, but can you assimilate this and make it part of your DNA is actually the challenge. The post award is once you have got the award notification and you start implementing, so you start getting your funds. Okay. Now the funds can be in different ways. They can be as an advance, they can be on reimbursement basis, they can be periodic basis, milestone basis. All that is to be clearly understood. But generally, what we find is that in our country, the grant are normally on an advance basis. Sometimes they are on reimbursement basis, which is also something which is common. Okay. And milestone basis very randomly. Milestone means you will get funds once you have done a particular activity, or you have, completed certain outputs. And maybe a milestone can be at the outcome level also. So at the top level, at the purpose level of your program or your grant, have you fulfilled? There could be a bonus also. So it doesn't, it depends on what the negotiation has been at the award stage. Okay. Then we have physical implementation, then the reporting, both program and financial. The post award amendments, very important. Now you've got an award, but in the post award, you might want to amend the award notification for reasons. Okay. So if there are some key changes that have to be done, those employee changes, if the grant contract says, well, these are the people who will be allocated to this particular project, and these key people, if they, any of them is changed, you need to get approval. Or you might want to do a budget realignment or reallocation budget because of budget revision, or you may have a no cost extension. You might want that the contract is coming to an end, so you don't want the change or increase the budget, but you want to increase the period. Okay. So every grant contract will have purpose, budget, and time more or less restricted, and that is why it's called a restricted grant. Grants are restricted because there is an intended purpose which has been stipulated along with other conditions. That is why they are called restricted. हम free नहीं है, जो कि sometimes we feel that we are free with the grant. The money has come, now we are a king. Is something, some kind of an attitude that has to be totally washed away for everybody in the organization. What is the performance or what is the impact? Then there is this closeout. Now, if you close out means that the grant contract will should have a closeout clause which should say what conditions will ensure that we have fulfilled the closeout. the final report, the financials final, the audit done for the entire grant, the grant reconciliation done, the assets having been kind of, decided as per the grant contract, who will keep it, all uh, program related publications, any IPR related issues, all that has been settled, and there is nothing to be taken, nothing to be given. That's what is called closeout. Every contract should have a closeout condition and should be ticked, and a notice should be obtained by the grantee saying that the closeout has been successfully done, which means you culminate the grant in terms of a formal completion. And the next one is reapplication. So if you have done well, there will be the reapplication or repeat of the grant by the donor, in which case you will again be back on the pre-award stage for a new grant. Okay, this completes the grant management life cycle for this grant. But when you reapply, there'll be a new grant. Where will you be on pre-award in a reapplication? You will be at point number 3 in the pre-award. And that is the advantage that you have when you reapply and you get a repeat grant. You have taken out all issues related to planning because the need is still not saturated and the donor is fairly happy with you. Okay, then you don't have to scout for that donor. You get a application or a repeat grant. And organizations which have repeat grants ensure that their donor base continues to build up. Otherwise, the donor base is, if it is don't have a good donor base or you don't create a decent donor base, there will be erraticity of the funding as far as your organization is concerned. But if you have done well in the previous grant in terms of its fulfillment of the life cycle of that grant, then the reapplication will bring you straight away to a new grant application, and you will bypass many of the conditions or many of the requirements which will eat up a lot of time and effort in terms of a new grant. So the same donor will give you a new grant and you will actually be somewhere at the final stage of pre-award in terms of a a grant application, and you will have a better understanding of the requirement of the donor. Okay, so some of the good organizations will have grants which will run, or donors which would be giving them grants for several years, maybe even a decade or even more than a decade. You never know. So what I'm trying to say is that the grant management life cycle, the understanding and the practice of the life cycle will ensure a repeat grant from the donor. Now, the principles of good grant management: accountability, transparency, and trust, not just for the sake of saying. Accountability is, combined for purposes of delivering. So as an organization, as an organization, have all of us put in the effort, have all of us felt accountable for our piece of work that needs to be done for that grant is something that has to be ensured. And that is what is teamwork in grant management. So who all are there in the life cycle and what is their job is the accountability piece. It's not a word, it's a meaning. It has great meaning. Transparency, as I said, the understanding of meaning of word transparency is see through. Can your activities be seen through, be such that anybody can see through? That's what it is. Trust, the confidence of each other in terms of honesty, in terms of credibility, because this is trust money. These are trust funds. The word trust, okay? Fiduciary, efficiency and effectiveness. Now there's another aspect to this good grant management. Efficiency and effectiveness are two separate words. Efficiency is the process. Efficiency refers to the process of converting an input into an output. Okay. Converting input, meaning converting HR cost, converting program cost, converting travel, converting training into an output which we have ensured in the log frame. How good we are in terms of converting this raw material into outputs, The people who understand log frame, they know all this, that all our activities result in tangible outputs, and that is the efficiency. The effectiveness is the sum total of all outputs. Can it be done with less resources and still the outcome is done, or with the assigned resources more output can be done, is the effectiveness of the grant. Now, organizations or donors look at both efficiency and effectiveness as far as grant management is concerned. So please remember, these are not words. These have to be actually demonstrated in terms of our action and in terms of our grant management life cycle. ये कोई नहीं बताएगा आपको. Compliance with laws of the land and adherence to the conditions of the grant. Two separate things. One, all legal provisions that are applicable. And we have seen so many of this. Remember session one, when we are looking at the compliance piece of our institution as in terms of due diligence, how many compliances are there for a not-for-profit? That's the laws of the land. And the compliance with the terms and conditions of the grant is specific to this grant contract, and these grant contracts can be different. We will have a generic understanding of the terms and conditions of a grant contract. Then in the next session, internal controls, the necessary internal controls to give the confidence to the donor that there is safety, transparency, accountability, trust, efficiency for this grant fund. And we have seen the various areas of internal controls which are focus of donors. All right. सारी चीज related है. Communication and timely reporting. Now, communication is something that I said as one of the tips for good donor due diligence, is also very important for grant management. How good your communication is, what is the coding decoding process in the communication. You know that you code and somebody decodes, and then he codes and you decode. Is that process seamless? Is that interface good? Then the half the job is done. The second one is reporting. That's part of the grant contract, both in terms of your narrative and your financial report. I have written timely reporting. So it's not a question of reporting, it's the question of when the report needed to go. That's the more important thing than the reporting itself. Okay, when was it supposed to go? Now I have filed my grant contract and file, and after 9 months, when the donor sent us a mail, we started opening the grant contract to see when is the first report due, when is the inception report due, the first trimester, I mean whatever report, quarterly report, or whatever report has to go. What is, then we start running around to start making the reports. So reporting is very important. Now, as far as prerequisites for a robust grant management from the finance side, so the internal controls in the previous slide actually get reflected in terms of policies and procedures. इनका यही policies and procedures alone are the proxy indicators, not only proxy indicators, but once we deliver on policies and procedures, they demonstrate the internal control environment in an organization. What is internal control environment? Internal control environment means, are we able to manage or mitigate our risks? What is the internal control environment? The internal control environment is what is the level of risk management? That is the environment. जैसे डॉक्टर आपकी नब्ज देख के बताता है आपको बुखार है, आपका पल्स है, आपका बीपी ऊपर हो रहा है, नीचे हो रहा है. These internal control procedures in place is examined by the donor and its auditors to see whether you have the prerequisite for a robust grant management system. Now, accounting is very important for grants, and therefore, since we are doing the finance side slightly more, I would request you to go and read, if you need to, the ICAI, the Institute's technical guide on accounting for not-for-profits. The recent version is the January 2022. That's the framework for not-for-profits. And I can tell you, in terms of the finance side, in terms of the accounting framework for not-for-profits, there cannot be any better book or guide than this technique, that this TG on accounting for NPOs. You can download it. There is the initial version of 2009, but the 2022 is an updated version. It talks about fund based accounting. क्या होता है fund based accounting? क्या हम when we work in not for profit organizations, do we understand this word? Have we ever heard this word? Do we practice this word? Fund accounting. We'll see that in the next slide. But before that, please understand that the institute itself says that when you manage grants, please follow the principle of fund accounting. The second is accrual basis of accounting, which is the gold standard, which is the mercantile standard, and which has also been mandated by the Income Tax Department since August 2020. The third one is maintenance of books of accounts. So we are looking at what gives the semblance of good grant management in terms of prerequisites when we talk of finance. Maintenance of books of accounts. This is something that is also mandatory now as far as income tax is concerned, and we have seen that. Okay, a new rule was introduced, and uh, you have to the not for profit organizations have to maintain those books of accounts and other records. Okay, there's no way out. Accounting standards. Okay, so how have the financial statements been framed? Okay, have how have they been presented? How have they been recorded? How have they been summarized? How have they been reported and presented? Is based on accounting standards that have been laid down for each item of asset, liability, income, and expenditure. That is the framework for deciding how to record and present. You cannot record and present any item of balance sheet or financial statements on your basis. It has to be against or in line with a standard. Standard means benchmark. So the institute says that if you were to talk of grant, which is an income of an organization at a certain stage that we will see, then that grant has to be accounted for against us, or against the background of a standard. You cannot, otherwise there'll be no comparability, there will not be standardization, there'll be no consistency in terms of what it is. So reporting and presenting the accounting standards is very important. Segregation of duties and checks and balances, we had seen that, one person's work being checked by the other, so that's segregation and specialization. Encourage audit and assurance is something that is also very important as far as grant management is concerned. Now we come to the concept of fund accounting. Uh, Now, it's fund accounting is not just to understand this word called fund accounting. Now, it's more to do with not-for-profits, not just in India, but across, universally, the fund accounting is the accounting system for managing grants. While we know it has to be done like that, but do we know that we are practicing fund accounting? I don't even know whether accounting people would know that or not, when we ask them. So, but the gist of what fund accounting is something that we practice. But if we know the basics or the reason why we are doing fund accounting, then we will do it in a more sharper fashion. So fund accounting is an accounting system for recording and tracking project resources, or what you call as fund, or what you can call it as grant. So the grant, we are calling it as fund right now. It is a system, it's an accounting system for recording and for monitoring or tracking a fund. We are talking of a grant management life cycle. We said grant management life cycle of a grant or of a fund. So you are recording and tracking that fund exclusively. Okay, what is mandated in that fund? The mandate in the fund by the donor is that the use is limited or restricted by the specific conditions by the donor through the grant contract. The grant contract we had seen, the award stage, the grant contract says that this fund, please account for and track that in terms of the restriction that I have put in, and the conditions that I have put in as far as my donor contract is concerned. This is fund accounting. So every donor is very selfish in that sense, okay? While they are interested in seeing that the organization grows, but when it comes to dealing with an organization, every donor is selfish to the extent that they are concerned mainly once having established an engagement, they are concerned with their own grant, okay? And this concept of being able to satisfy each donor for their fund is called fund accounting. Now this is very different. This is something that is practiced by not-for-profit organizations and therefore comes from the concept of accountability or productivity versus profitability. Now when it comes to profitability, we talk of the for-profit organizations. There all funds can get merged because all funds have to generate profit. Here, every fund has to generate accountability or productivity. Every fund has to generate accountability in terms of the intended outcome. The intended outcome of grant A is not the same as the intended outcome of grant B. But the profit of a for-profit organization is maximization. 100 rupees, 2000 rupees, 5 lakh, 50 crores, the same amount. And then it gets distributed among the shareholders. Here you don't have any shareholders. Therefore, the donors are saying, please compartmentalize my fund as the other donor is also saying, the third donor is also saying, and therefore the recording and reporting is very, very straight jacketed into funding streams, into compartments or buckets, as you might want to call it. This is the concept of fund accounting. Now, what are the features of fund accounting? It's a separate fund. Okay. There are compartments or buckets. सो आप हर फंड को समझ सकते हैं बिकॉज हर फंड आप कॉस्ट इंटरेस्ट के हिसाब से देखते हैं. हर फंड की अगर बैंक मैंडेट अलग से है तो उस बैंक में हम आप फंड की स्ट्रीम को भी देख सकते हैं. तो फंड की स्ट्रीम को बैंक में देख सकते हैं और फंड के मूवमेंट को आप अपनी किताब में देख सकते हैं इन योर अकाउंट बुक्स. दैट्स व्हाई इट इज कॉल्ड सेपरेट फंड. ओके, सेपरेट फंड. And the presentation of these funds is also to be done separately in your financial statements. Second is restriction on use. So there is a condition. Third is there is a separate budget. So each fund will have a separate budget. There is no composite budget. Therefore, when I say you have to make your master budget, and we'll see that in the next session, you have to all, that is what? The assimilation of the project budgets plus your own organization's contribution to expenditure. That's called the master budget. So each fund will have its own budget. That is something that you'll have to see. And your credit and your debit against that budget has to be to that budget only or to that fund only. You cannot be crediting, debiting to other grants or other funds or other budgets. Okay. Therefore, budgetary control or budget variance or budget monitoring is so important. Because at the end of the day, you cannot be diverting monies from one grant to another. Each grant has its own funding stream, its own restrictions or condition, and its own intended outcome. There is transparency because you can see through. That's what is the the feature of a good grant management system. Transparency. Who ensures this transparency? This concept of fund accounting. Software is there for recording your transactions, which is very good. Okay, that's fine because you have a software. A tally is a software which is the most common for not-for-profits, which facilitates that recording or that fund accounting system. The next is it ensures good internal controls because you are ensuring that you are accountable for that particular fund and you have followed all the internal control procedures so that there is better internal controls. There is no haywire here and there. The monitoring and reporting mechanism is also better with fund based accounting. So the monitoring will be based on the fund, the reporting will be based on the fund, and that means that you are fully following the concept of fund accounting. This slide is the gist for us to understand that all grant funds have to be looked at uniquely or discreetly and not as a homogeneous, uh, piece or or a put together as a single item. They are all separate. And this understanding is not at the chief functionaries level. This understanding is at every level, both in program and finance of an organization. Now we come to from our concept of grant and the features of grant and the prerequisites and the good features. We have come to the second concept of uh, recognizing grant based on the concept of fund accounting. But now we want to understand what are the various types of grant funds or funds, as we might call it. Again, very, very difficult to adhere to a certain word. But anyway, I will say what are the type of funds. Now, these might be grant and these might be somewhere somewhat free, but we need to understand कितने तरह के funds हैं for not for profit organizations. Again, are they specified in law? Not really. As I have mentioned, it's not defined. The word grant is not defined. If you look at the income tax, it's actually calling it as, voluntary contribution. Okay. And voluntary contribution also includes corpus donation. So they call it donation, they call it voluntary contribution, but rarely will you find the word grant. When it comes to foreign contribution, they don't use the word grant. They call it FC. That's all. When it comes to CSR, they call it CSR, the CSR's amount or CSR spend or CSR fund. They don't call it grant. And therefore, since they don't call it grant, their understanding of the word grant is not there. And the understanding of the grant is not there. The understanding of, the concept of charitable organization is also not there, not their mistake. Because the law does not define. So the corporates are giving money, government is giving money, retail is giving money, foreign is giving money, everybody is giving money. But everybody's understanding of what commonly this money should mean, and what it means for the person to whom we are giving, that is absent. And that is something I think the government is working on it. You will in the next couple of years see a lot of rationalization and standardization in terms of not for profits, और उसके लिए तैयार हो जाइए. Okay, you may see a collapsing of the constitutional laws, you may see a lot of rationalization in terms of understanding, because ये understanding और ये definitions rationalize नहीं है, इसलिए understanding different है, तो interpretation different है. Anyway, I am only telling you what is there today. I really don't know what happens tomorrow. We are here for today. Now, again, I go back to the TG for helping you to disaggregate funds that charitable organizations get. Again, the TG is the one which gives us some good light. And since it's coming from the best SRO in the accounting business, therefore I lean towards it. They categorize all funds for not-for-profits in two categories. One is what is called as unrestricted funds, and one is what is called as restricted funds. ये कहीं पे लॉ में लिखा हुआ नहीं है, लेकिन ये क्लासिफिकेशन है. ये क्लासिफिकेशन इसलिए आपको जरूरी है जिससे आप ये अंडरस्टैंड करें, जब आप बैलेंस शीट देखें, जब आपसे डोनर बात करे, जब आपको कॉनोटेशन या इंटरप्रिटेशन समझना पड़े कि मनी का क्या कलर है या मनी का क्या टेक्सचर है विच द डोनर इज टॉकिंग, एटलीस्ट यू कैन रेफर टू दिस. The UF and the RF is broadly the two classification of funds as far as not-for-profits is concerned. Okay, just understand that. And the distinction between UF and RF is restriction. Okay, the word restriction, the word condition. Okay, now the condition or restriction can be basically are or in terms of purpose restriction, time restriction is something that we are most used to. So if the purpose time restriction is not there, then there is no restriction essentially, and therefore you will call it a UF. Now what are the UF as far as a not for profit organization is concerned? और हम ये भी देखेंगे कि हमारी बैलेंस शीट के ऊपर UF और RF कहाँ बैठता है. Where can we find that in our balance sheet of a not for profit organization? Now, the first one, as far as UF is concerned, is what is called as corpus donation. Now, this is acknowledged in the income tax law. The income tax law in section 11 recognizes corpus donation. Okay. And the corpus donation can be generally is non-refundable, generally is non-reducible, generally is non-reducible, but with specific approval can be reduced on the condition of replenishment. Okay. Replenishment is what I am using as word. Okay. So generally they are non-reducing, but in case of an emergency, a corona-like situation or any situation which is, force majeure, an act of God, then the non-reducible can be reduced, but with a condition that it will be made good in due course of time. And the third is what is called as reinvestment obligation. क्या ये आपको कहीं मिलेगा ये वर्ड्स? कहीं नहीं मिलेंगे. बट क्या ये प्रैक्टिस होते हैं? Yes, they are fully practiced. So the point relates to corpus donation. Now the word corpus donation has been specified in income tax law, but have they said non-refundable, non-reducible, reinvestment obligation? Nothing like that. But what are the conditions for corpus donation is very important for us to understand. ये 5-6 conditions नीचे लिखी हुई हैं. Okay. When does a voluntary contribution be considered as corpus? Only, I said, one, when the specific, when the donor specifically directs that it shall be treated as corpus. अगर उसने अपने donation letter में नहीं लिखा कि ये corpus है, then it is not to be treated as corpus. Second thing is that if it is corpus, then it will be reflected in your capital side of your balance sheet, which is the point that I have mentioned somewhere. But capital as per income tax law. So one, it should have a specific direction from the donor that it should be treated as corpus. Second, this is income tax law. Second, that it should be treated as capital, not as income. That only the income from the corpus, which is the deployment of the capital into any kind of assets like fixed deposits or anywhere, that income should be recognized in the income and expenditure statement. Third, it should be invested in specified modes of investment in section 11.5. So the section 11.5 talks about what are the modes of investment in which the corpus has to be invested. Otherwise, it will not be treated as capital, it will be treated as income. Next is that it will be considered, you can use it, you can reduce it. It will be considered as an application or expenditure when it is replenished, not at the time when it is used. And that corpus will not be considered as expenditure or application if it is given to another charitable organization. Okay, very important to know these terms and conditions. So if you get corpus, be very clear what are the conditions that you will have to fulfill to ensure that you not only retain it as corpus but also report it as corpus in your audit report and your income tax return. Okay, very important. The second one, so corpus is recognized as unrestricted. Corpus may, what will the donor say? I am giving you this money, you are the best judge, please decide on what objectives you want to do it, on what kind of activities you want to do it. You would want to do it only for your, kind of your operational or your own expenditure, or will you want to do a project? You decide, don't worry. Just keep reporting to us that you are using it as corpus. All right. And this is the most, wonderful voluntary contribution because it does not have any restriction. You probably can use it when there is no money available elsewhere. The second one is donations. Now, the donation and the word grant, let us understand that also, because we talk donation and grant. There's no distinction in law, nor is it explained. But a donation is unrestricted grant. Okay. And a grant is a restricted donation. Let's understand that way. So a donation is also something where the donor is saying you are the best judge to decide. It's basically like a gift. A grant is not truly a gift, because a gift will mean that the person who is getting the gift is free to deal with it, which is not the case with grant. But with donation, yes. Is this specified? Not really. But the word donation is used several places as far as income tax is concerned, and more specifically for corpus donation. ठीक है. सो अगर आपको डोनेशन मिलता है तो वो कैपिटल नहीं है, वो इनकम है. और वो डोनेशन के अंदर आपको ये देखना होगा कि वेदर देयर इज एनी रिस्ट्रिक्शन और कंडीशन. वी आर लुकिंग एट अनरिस्ट्रिक्टेड फंड्स फॉर एन ऑर्गेनाइजेशन where there is no condition that is there. It will be reflected as income to be used in the way you want to do. If you don't use that in that year, then you'll get transferred to your point number actually D, which is general funds. Now, the next one, which is unrestricted fund, is designated or earmarked funds. Please remember, these are different from grant funds. These are earmarked funds for specific activity. But these are free funds. These are not restricted. These are funds which or on which there is no obligation. But I, as a management, want to put an obligation, or I want to designate or earmark these funds for a certain activity, because otherwise these will be called as general funds. अगर उसके बाद देखेंगे आप, general fund means they are not even earmarked, but both of them are free reserves. There is no obligation to anybody. This is my organization's money. But as an organization, I want to build a small office. I want to have a vehicle. So should I leave it as general fund, although it's a surplus and my money? Or should I then say, well, the management has decided to earmark it for this particular activity so that we don't touch it otherwise, only we use it for the earmarked activity. But in both cases, they are free reserves or surpluses as they are called. They're not called free reserves. In free reserve is basically a for-profit word. So the general funds are surplus. The general fund could also be a deficit. It's brought from the income and expenditure statement. Okay, these are not designated. These are free funds. Okay, that is why they are unrestricted. Now, if you have a situation, they are basically a rainy day fund, or they are a fund for which you don't have to go to anybody and ask whether I can spend the fund or not. That is why they are unrestricted. These are the funds which you have generated by way of any surpluses that might have occurred, whether you got a donation or whether you got an admin cost, or whether you got a reserve or you got a contingency from this thing and you didn't spend that money, or you got indirect cost. So all that is something that, or you got interest on which there was no restriction, or you got rent. That rent you did not spend, and the money, the surplus of that rent goes to your general reserves or general funds. So restricted funds are, unrestricted funds are corpus, donation, earmark or designated funds, and general funds. Now we come to the RFs, and the restricted funds clearly means conditions or restriction. Which are the ones? The project or grant funds are restricted funds. Okay. Now the restricted funds may be permanently restricted or partially or temporarily restricted. That's the further bifurcation. Okay. So the permanent restriction means money to be used only for this purpose and nothing else. ये grant मैंने आपको दी, ये grant इसी के लिए होनी चाहिए, नहीं होती तो वापस दे दीजिए. And the conditions are also mentioned in terms of the project grant. These are the outcomes, these are the outputs, this is the period, this is the amount, this is the way that you'll have to do. Oh, there could be many conditions or restrictions. So here, as far as restricted grants are concerned, or project or fund or program grants are concerned, or grant funds are concerned, which are restricted, we are fully complying with the fund-based accounting. Now, as far as the second restricted fund is concerned, it's called endowment. Now, endowment is in the nature of corpus, all right, because it's long-term, it's non-refundable, it's non-reducible. There may or may not be a reinvestment requirement obligation. But there, why have we put it in restricted fund? Because the end use of the income from the endowment is defined or decided by the endowment donor. That's why there is a condition or restriction. So, as I mentioned, the recipient owns the fund but does not control the fund. That's what is the acid test or the test to decide why we have put endowment as a restricted fund. Now, endowment fund temporarily restricted भी हो सकता है, and then it can become a corpus in the sense that the donor says, I'm giving you this endowment for this particular purpose or this particular period of time. And after that, you are free bird. You are a free bird. So then it will move from restricted fund to UF. The presentation will change. So you will have to see that the restricted funds, are they fully restricted during the currency of the the contract, or they are temporarily restricted, okay, for a certain period or for a certain objective. Once the period is over and the objective has been fulfilled, that can be given to the grantee as an unrestricted fund. You decide how do you want to do it. These are the way in which funds are defined in the not-for-profit space, not defined by law, but by convention or precedent. Now, when we look at the financial statement or the balance sheet of an organization, where do we find these funds? So, see this particular table, which is a balance sheet as at on a particular date. You have unrestricted funds. They are on the capital side. When I said sources of fund, yeah, liability. It's a liability. Unrestricted funds कौन से funds होते हैं? Unrestricted funds are corpus donations, general funds, earmark funds. Okay, as we had already seen, or donate, or the word donation I have not kept because the word donation will come in the I and E statement because the donations are reported as income for that year. Only if the donations are not utilized will they get carried forward from the I&E statement as a general or designated fund. Understand that. That is the relationship. The other one is the restricted fund. Now, balance sheet में unrestricted fund or restricted funds क्यों आते हैं? Because those are the unutilized grants which we call as deferred revenue. Okay. So unutilized grant is a liability. We are reading this and we have seen this, that grant is an obligation or a liability. So if it is unutilized as at the end of a period, where will it show up? Where will it be sitting? It will be sitting as a liability. And it will be becoming an income in the next period when it is utilized and will be liquidated as a restricted fund. Similarly, endowment is a restricted fund if there is permanent restriction. मैं और नीचे में नहीं जा रहा because वो तो other parts of the balance sheet है. I am only saying जो हमारे funds हैं, तो हमने क्या देखा? Unrestricted funds donation को छोड़ के सब यहाँ बैठे हुए हैं. Restricted fund में endowment बैठा हुआ है और unutilized part of the grant बैठा हुआ है यहाँ पे. Okay, unutilized part of the grant. So if you got 100 rupees from a donor and you spent 80 rupees, will you show 100 rupees as your income or 80 rupees? You will show 80 rupees as your income because your expenditure decides your income. And this 20 rupees will be the liability, and on the asset side, it will be sitting in the bank because it's unutilized. Similarly, endowment grants. Endowment grants sitting here, and the money in terms of the principal amount of endowment also sitting as an investment. corpus sitting as an investment. It will not be sitting as bank, because जब हम इन्वेस्ट करेंगे और असेट साइड में इन्वेस्टमेंट में दिखेगा तभी उसके ऊपर इनकम आएगी. बट द इनकम फ्रॉम एंडाउमेंट and the income from corpus will be showing up as income in the I&E statement for us to spend as unrestricted funds in a certain sense. Now, the in not for profit, we talk about a word called net assets. आपने सुना होगा, नहीं भी सुना होगा, but I'm just explaining to you. The net asset, when people talk about net asset in a not-for-profit organization, that actually means the owner capital. There's no owner in a not-for-profit organization. Let's understand that. Okay. But when we talk of net asset, it's like the net worth of a for-profit organization, and therefore referred to as owner capital. Now, what's owner capital in that you can see here is the unrestricted funds, because that's capital. Even endowment is a capital, but an unutilized grant is not a capital, and therefore we come to the definition of what is net assets. Net asset is again something that is very particular to not for profit. Okay. इट्स लाइक नेटवर्थ ऑफ अ फॉर प्रॉफिट. नेटवर्थ क्या होती है फॉर प्रॉफिट में? उसकी शेयर कैपिटल जो शेयर होल्डर्स ने दी है, और उसका रिजर्व्स एंड सरप्लस जो उसने प्रॉफिट कमाया है, जो उसने स्पेंड नहीं किया. Here also, in terms of not for profits, when we talk of net assets, it's total assets minus total liabilities. So it will be the general fund, the designated fund, the corpus, that will be the net asset, which means अगर कुछ मेरी organization को होता है, तो this net asset amount in my balance sheet is the one which can, help me tide over in a difficult situation. Okay. Net assets mainly includes corpus and general funds. But you must understand what's the word net worth or net asset as far as a not-for-profit organization is concerned. I think nobody will tell you. Now, coming to the I&E statement. I&E statement में funds कैसे reflect होते हैं जो हमने अभी तक funds देखे? How are they reflected? All right. So we are only going to see, I'm going to only show you the income side. And I'm also going to show you the expenditure side for a reason. The income side is grants and donations. Donations, unconditional grants. Unconditional grants is donation. Conditional donations are grants. Okay, very easy. Now, donations aapko, in every case, donation being unrestricted funds has to be shown on the I&E. As far as grants are concerned, the prudence principle says reflect grant in the income as income to the extent of expenditure. Because once you have spent the money, you have discharged the obligation. And to that extent, it is your income. And whatever has not been discharged is your liability, which we saw in the previous balance sheet. Because that money has not been spent, that money is also sitting in bank. Therefore, on the assets, on the liability side, on the asset side, it is sitting in bank. And that is how it matches. So grants and donations, grants to the extent utilized and donations to the extent that there is no conditions is one income source. Second is other incomes. So you get rent, you might get income generation through activities, you might get fee and subscription, you might get incidental business, you might get interest. ये सब other income है. और ये other income अगर आपने spend नहीं किया या need नहीं रही उस साल में, then it will go to your general fund as a designated fund or earmark fund. You might say, well, I got this rent, and I didn't need to utilize this because I was good enough for with whatever grants and donations I got. This rent, I'm going to actually build another, 2 rooms on the top of, on the first floor of my office. That's how the earmarked or designated fund concept gets into. This is the practical side of how you have to look at it. Now comes to expenditure. Now, जब हम balance sheets, income and expenditure देखते हैं और not for profit organizations का, we find the salary, this, that, XYZ, all those things that is. Now, what I'm actually saying is that, and we will see now when we do the last component of cost or cost types, that's how where we will see what is the difference between natural head of cost and the functional head of cost. जो expenditure, whatever is the expenditure that we do as a not-for-profit organization is for a function, for answering a question why that expenditure was done, not for answering the question what it was done, what it is for. Is it for salary? What it is for? It is for salary. What it is for? It is for travel. Is that what we are meant for? No, we are not meant for that. We are meant for the why of the expenditure, why it was spent. So you will see the expenditure based on the natural heads of expenditure being presented in the functional sense, and that's what has to be the right way of presentation of expenditure for a not-for-profit organization. Program expenditure, program delivery से related all expenditure, support, you know. So then the second one is basically support costs. So program costs, support costs are the two functional bifurcation of expenditure as far as not-for-profit organization, and all expenditure should show that the expenditure was done, what expenditure was done was for why, because we are meant for why, not for what. Depreciation, of course, is all right. Now, whatever is your income, suppose it was 150 rupees, which included the utilized grant, only utilized grant, unutilized grant तो सीधा balance sheet में चला गया. 150 के against me, we were able to spend 100 rupees. Now, this 50 rupees is your surplus. There can be a situation of deficit also, where you might have to actually, you might not have got a grant, but you will, that will come as grant receivable. You might have to take a small loan. You know, I didn't show the balance sheet in full detail, but there was the loans and borrowings also, which is also possible for not for profit organization. But we are looking at a much healthier picture, a more rosier picture, a much better organization, and we find that 50 rupees is left over after meeting the expenditure as income. This 50 rupees is can be your designated fund or earmark fund, or can be your general fund. That is how that 50 rupees will travel from here to the liability side of your balance sheet and will sit there, and will also sit in bank and can be utilized in the next reporting period. That's how the relationship is. Now coming to the grant recognition by NGOs. Now we have income tax in income and expenditure statement, and we have seen the balance sheet. These are our top level financial statements showing the health of our financial health of our organization. Now there are again here, because convention again drives how we have to present this. There are three options that are available as far as grant recognition is concerned. One is that the grant is recognized at gross. You know, the entire amount of, suppose you got 100 rupees as grant, the entire 100 rupees, even if it was not spent, is recognized as income. Okay? Not if you spent 80 rupees, not 80 rupees, but the entire 100 rupees, you still spent 80 rupees only. But you have reflected the grant as income completely at gross grant income I have mentioned. Now the second option is that the grant at gross basis is routed through balance sheet. So it will not even show in your income and expenditure statement. Meaning that the grant, the organization feels that grant is never to be looked at as income. So they will say, we will route the grant both from the liability side and the asset side of balance sheet only, and will not show it in the income and expenditure side at all. If you are understanding what I'm trying to say. So in that case, they will be routed, they will be shown as liability at gross, and whatever is left as net will still show, and the amount of money that will get spent for activities will be debited from bank, and whatever is left as unutilized grant will also be showing up as at bank. So there is no involvement of the income and expenditure statement as far as showing the grant income inflow and outflow through balance sheet is concerned. The third one is, which is what is called as the hybrid method, which is what I have actually shown you. that the grant is treated as income to the extent of, expenditure, and the unutilized grant is shown as a liability. Now, this probably in terms of the accounting standard 9 and the general principle of recognition of income, okay, based on the matching concept, is the option number 3 appears to be the best way of presenting grant income in your financials, or understanding the presentation in financials, because that gives the best possible picture. However, since there is no mandate for any of these options or any of these ways, you decide what is prudent, but you have to be consistent about that recognition principle year after year, so that that abruptness is not there. Please understand, we are talking of the word grant in terms of how do you recognize or present those grants in your financial statements. These are the 3 ways in which you can do it, and you'll have to decide which way. Although we think that the option number 3 is probably the best way, you may not think it. You may think, well, I will like to show grant income at gross in my income and expenditure, and take it to the reserves, take it to surplus, and next year when I spend it, I will borrow it as a deficit from reserves and surplus. That's also something that's possible. Okay, but then it also affects your 85%. It affects your computation. So something that you will have to see. I'm not bringing in too many complications. Since we are talking of grant today, therefore I am only trying to bring that. Now we have to, before we go to the concept of cost, we have to also understand the words recipient, subrecipients, and vendor. This is very important, because we have to distinguish between these 3 kinds of entities. Recipient is basically the grant receiving, the principal person receiving the grant. They are the ones who are supposed to fulfill the obligation from the grantor, okay, through the grant contract. That's called recipient. Sometimes it's called prime recipient. PR also it's called. Koi donor bolega PR, we'll start looking at each other. What is a PR? So recipient is basically the grantee. The sub-recipient is when another organization which has the ability to perform some part of your grant gets associated with you, and you give them, or you sub-grant it, or sub-award that particular component to that particular organization. It will again be a not-for-profit entity. That is when it's going to come in the purview of sub-grant. And that will be a relationship not with the donor, but between the recipient and the sub-recipient. The donor does not come into the picture. The donor may come into the picture to the extent that when they negotiates the award with the recipient, it will recognize that this work will be done by the sub-recipient. This is through the sub-grant contract. The responsibility for anything that is done by the sub-recipient is on the recipient. So if some part of the program is to be delivered by a charitable organization, which they are capable of doing because their objects are more focused on that as part of the overall grant project, is something where sub-recipients come into the picture. However, when there are any commercial, if you have program related, if you have equipment to be purchased, that's where you buy it, or you have consultancies to give, that is through vendors or service providers. So this distinction has to be clearly understood by all of you, all 3 distinctions in grant management. The first 2 are peculiar to grant management, and the third one is not peculiar to grant management as such, but the grant implementation, it is peculiar, because if you purchase certain program goods, if you purchase certain admin goods, if you purchase equipment, if you purchase consultancies, that's where the vendor concept comes. So the distinction between a vendor and a sub-recipient in the same grant is to be clearly understood. Now we come to the third part of our session, which is on costs. Okay, मैं आपको यहाँ पर I want to clear your concepts about costs, and we are talking about not-for-profit organizations. Please, we are talking of NPOs. Now, NPOs may, what we need to practice is the functional definition of cost. Okay, so I have mentioned cost and expense distinction. And when you talk about cost and expense, basically cost is more to do with fixed assets and expense is variable or routine operating expenditure. That's the distinction. Now, when we talk about classification of expenses for not-for-profits, it's in the natural expense head and the functional expense head. मैंने आपको ये बात अभी जब IND statement when I was showing it to you, that's where I reflected there. But we are seeing it more in detail. Understand that you will have some expenditure. So what is naturally the attribution of that expenditure is the natural expense head. Salary, okay, travel, okay. What are the type of expenses or what the money is being spent on is what is the natural head. Salary, rent, hotel accommodation. Now, all these natural expenses can be grouped into larger group heads, which we can also call as line items in our budget. ये कॉस्ट का कॉन्सेप्ट मैं आपको पढ़ा रहा हूं, which will then take us to the next stage, which is the budget formulation. Now, the cost is what is so important because if you do not budget your cost properly, you will have either shortage of money or you will have money which is not required by the project. So the cost concept has to be clearly understood so that you can come to the computation of complete cost for this particular grant. Most of the time we keep struggling and saying this cost was not enough for the grant or we spent it here and there. That's because our understanding of the word concept, our formulation of the costs in the budget, and our implementation of the budget itself in terms of using the estimates doesn't have that discipline. But we can bring that discipline based on our understanding now. So the broader cost heads, the broader group heads in a budget are the line items we call it. आपने budget lines word सुना होगा. Now the group heads are nothing but budget lines like HR cost. So the group head HR will include what? Salary, HRA, PF, gratuity, leave encashment. Similarly, group head travel will include what? Travel expenses, conveyance, airfare, meals, accommodation. That so the travel becomes the bigger group head, and each of these natural heads is part of the group head. So you can do that for all kinds of line items. But basically, in budgeting for not-for-profits, the line items are HR, travel, program, trainings, monitoring evaluation, okay, office cost. That way, isn't it mostly? So this is what the cost is. What is the innate nature of this cost? ये तो हो गया. But there is another way of looking at it, which is the way donors look at and which is the way authorities look at. Because what is not important for them, the why is important for them. And that's what is the functional categorization of expenses. Why was this natural head incurred? Why was this expense incurred? What was the purpose of this expense? We saw that a grant should be for a particular purpose. So what was the purpose for this expense? Was the purpose of the expense for the intended purpose of the grant? Is the functional classification or the functional expense head. Now, the functional expense head for not-for-profits are broadly categorized as program delivery and support costs. So that's again all costs that have been incurred. So the natural head is one way of looking at the same thing, and the functional head is the other way of looking at the same expenses. They are not different. Only thing is the way you look at it changes the way you work. Okay, the changes the way you present, changes the way the NGOs should be presenting it, because that's the base, that's what is the basis for their work. So was this a support cost for program delivery or not? Because every cost will not be for program delivery. You will need support costs for facilitating program delivery is what is the support cost. Okay. Now, so the program cost will have salaries. Okay. The natural head will have travel. All right. That's the natural head. But it is the way you look at it, the way you present it is in terms of the natural head and the functional head. Now, I said the basis for the work of a not for profit should be to present it in the functional sense. Okay. But all the so the natural heads have to migrate to the function. The natural head have to migrate to the function. So the natural head may be HR, training, everything will be there, which will migrate to program and support cost. That's how you have to look at it. Now, when we talk of, so this is the expense way of looking at expenses in a not-for-profit. The natural heads of expense versus the functional heads of expense. अब जब हम अपने project, when for a particular project we are making our costs, okay? When we cost for a project, how do we cost it? Now, there also we don't cost it as, salary cost and this cost, but we cost it in terms of broadly two ways of costing. But all these natural heads will fall into these two heads. One is what is called as direct cost, which is 100% direct traceability to this particular project. And they can be program costs and support costs. And program costs will have natural heads, and support costs will have natural heads. But why is it called direct? Because it can be directly attributed to the program. If there is no program, there is no direct cost. And the direct cost is basically for directly benefiting the beneficiary. So if you are able to see the direct costs, then you have to, and I said at the last, understanding and computing direct and common cost or shared costs is very important for covering your costs. पर हमें तो आइडिया ही नहीं है. We have no idea how to even look at our costs. My finance guy also doesn't have an idea, and we will never have that idea, and therefore we will always be struggling. So and this that I'm teaching you is no rocket science. This is so simple. Even a non-finance, I am a non-finance person and teaching you. So understand that when you have to budget for, so you have understood the expense heads and you have understood why all that. But now those heads have to be brought into a budget formulation. And that budget formulation has to be in two broad buckets. One is your direct cost. So your program and your support costs will be direct costs. As long as you can show that these costs will be there if the project is there and will not be there if the project is not there. However, there will be some costs will still be there whether the project is there or not. And those are called common or shared costs. These costs benefit multiple projects. Okay. And these again will be, can be, program costs or shared costs. Now, you have to have a methodology for apportionment, not allocation. Allocation is 100%, apportionment is proportionately done. So the apportionment of the common cost, why? Because you cannot load the entire cost onto this project. That is why it's called common cost or shared cost or part of the cost. You cannot allocate it to one project. You have to allocate it to multiple projects. But there has to be a scientific way which should be acceptable to donors to be able to apportion that cost. Now, the apportionment of that cost can be in terms of, time. So, person's time, HR person, you have a director, and how much time does he devote? Some of his costs, if you are directly attributing, will be called as common direct cost. That's a common cost, but it has been directly attributed. Meaning, if you have a program director and in the budget, in the direct cost side, you say 15% of this particular person's X level of effort and therefore his time will be directly on this project, that will become what is called as common cost, but it is direct. That's why it's called CDC or common direct cost. The remaining 100 minus 15 will still continue to be 85%, of which you will have to get this particular shared cost in your budget from this donor, because otherwise who pays for this 75%? Nobody. So you will have to allocate this HR person who is not 100% direct. If you had a CRP, a community resource person, an interpersonal communicator, okay, or whatever you might call it, वो तो पूरा इस प्रोजेक्ट के साथ में है, वो है, प्रोजेक्ट है तो वो है, प्रोजेक्ट नहीं है तो वो नहीं है. So there's nothing like sharing. He's 100% plugged to as a direct cost. But these are people in accounting, in fundraising, in management. Those, if the project is not there, they still have to be there. You will have certain support costs in terms of office, in terms of basic maintenance, in terms of XYZ, whatever, which will still have to be incurred whether you have a project or zero project. These are called shared costs. And these shared costs have to be recovered from projects or project grants in a certain ratio or apportionment. Now, the apportionment of such common or shared costs can be based on time, can be based on space. For instance, your office, you can, say this much space will be for this project. 15% of the total space is for this project. Therefore, 15% will be charged as a shared cost to this particular project. And the rest of the project has 5%, 2%, 7%, depending upon a certain basis. So the measurement of how you will apportion cost can be on various parameters: time, space, number, basically employees, beneficiaries, location. So you decide for your program and your support cost at that level, and then granularly broken down in terms of natural head and their common cost. आपको one of these, based on the what the cost is, you will have to benchmark or apportion based on a certain basis. Now that basis is what is, this apportionment is part of what is called as the common cost policy. This common cost policy says what is the method for computation and what is the share of common cost in this particular head that needs to be recovered from all the projects. Otherwise, who pays? We are not for profit entity. We don't have any reserves and surpluses. We don't have profit as the motto. Our motto is accountability, productivity, efficiency, effectiveness. Now, the common cost has to be the basis on which you will negotiate with the donor for the shared cost for that project. And this common cost should be reviewed every year, and the share has to be, what percentage is the common cost has to be worked out and charged to each of these donors as every year as you go ahead. So that the total cost for a project will be the direct cost, some of the common cost which is direct cost, and the third is shared or common cost apportioned to this particular project based on the common cost policy. Then you will have something which is called the institutional or management cost. Sometimes it's also called indirect cost for foreign donors. Sometimes it's also called as overhead. This is over and above this cost, which is some kind of a contingency or reserve that the donor might agree to. The donor may just not agree to anything. So which means that you will, at the end of the day, in your income and expenditure statement, you will not have a surplus on this project because all costs are costs that have been given, which do not leave any surplus. So the cost in terms of total cost is your direct 100%, your common direct, which is common cost directly attributed as a direct cost, and all the shared costs. Then and then only you will have the true cost or the total cost. And this cost does not come on its own. It needs at the back end all the policies and procedures, all the breakdowns, all the groupings that will help you to come to this number. ये तो मैंने लिख दिया ऐसे ही in this slide. I've just put it like this. When you start doing it, then you will get all the sweat in your body. What I'm trying to say is that this is the right way to arrive at the cost that you will incur for a project when you apply for a grant. Now, we are trying to bring in the concept of cost because that is so integral to the formulation of budget that unless we understand how to arrive at the cost, we will never be able to, you know, get our full cost from the donor. That's the message. So some donors may give you institutional cost because they might say, well, these are all costs that they have attributed. They need to have something extra also. If there is some contingency, some reserve, something that happens, do they have some buffer? Then they might say, well, we might want to give institutional cost. If you do not have institutional costs and all costs are attributable to the project or to the organization, there is no surplus. Please remember that. However, if you are able to cover your shared costs, you have ensured that your costs are covered completely and you might not have to pay that shared cost which you have not budgeted from your own resources. Other types of costs are capital and revenue costs. I mean, now you see, till this point is the point where you are actually talking about how to do the costing for your organization, for a not for profit. Now I will tell you some of the more generic cost types. Okay. But for us, the cost types, which is the most important, is the one that we have already seen. You will never find this bifurcation in any book. But that's the mentality or the thought process with which you need to look at costs. Only then you will recover full cost. Otherwise, you will keep struggling. I'm not saying you should double dip or you should double charge. That also you have to be very clear. So if you are able to have cost classifications, if you have to cost records properly, you will be having rationalized way of allocation of costs and apportionment of shared costs. Now, these are more generic. So capital cost, basically where you are one-time equipment for fixed assets which have a life of more than 1 year. That's what is capital. And that is the word cost actually refers to capital cost. Revenue cost or revenue expenditure. So we call it revenue expenditure, although I've mentioned revenue cost. These are operating expenses, short-term expenses for your operations. Fixed and variable costs. Now, the fixed and variable costs come from the Uperwala capital and revenue costs. But why I want to do that fixed and variable cost is the per unit cost in case of a fixed cost or a capital expenditure will come down as the numbers will increase. So if you have 1,000 rupees you have spent and you are generating 1,000 rupees of units, but if you then it is 1 rupee. But if you generate 2,000 units, because the fixed asset can allow you to generate 2,000, then your fixed cost will be 0.5 rupees. So you need to understand that capital cost, okay, has the feature that if you use it more, you recover more. Whereas the variable cost or operating expenditure have a more linear relationship with costs, which means the more you increase the volume, the more the variable cost. There is this direct relationship, direct or proportionate relationship, whereas as far as fixed costs are concerned, it is inverse. Other types of costs, historical cost. Historical cost. Please mention historical cost is something that your donor will say. I don't know क्या होता है historical cost. Historical cost is the cost when a particular thing was purchased, the original cost. So we will use historical cost for purposes of presentation. Sunk cost means something that cannot be recovered. You have sunk that cost. So if you have purchased equipment, furniture, that's something that you cannot kind of recover. It is sunk. Marginal cost, every further increase in volume, what is the cost? It necessarily should change and should decrease. Opportunity cost, opportunity cost is the next best alternative. What is the cost going to be? Now when do we use opportunity cost? We use opportunity cost when we take a decision like, should we rent a, machine, or should we buy a machine? Should we rent a office, or should we buy an office? What is the cost and long term, the value over a period of time of the next alternative for buying, that is renting? Okay, so that is what is called as opportunity cost. These are more used in when we use the, the cost uh, generally. Okay, but you must know what are these. Now these cost principles is the last slide for this presentation, which is uh, and I have picked this up from USAID. uh, for project grants, please see that the cost is allowable. Okay, there are no costs which are not allowed for this grant. So please see the donor guidelines, the donor grant manual of the donors, to see whether there are allowable costs. Now allowable costs also means is that the cost is allowable versus your program proposal. That's also the meaning of allowable costs. So allowable costs could also mean that, you know, the other part is the unallowable, which means that these will be allowed and these will not be allowed. But what will be allowed will be what you have budgeted in what you have provided in your program proposal. And therefore, when you make the program proposal and the budget, there has to be synchronization between the two. Otherwise, the program proposal and the budget will not match or marry each other. So that's what is allowable cost. Allocable cost is whether this cost can be allocated to this particular project activity or not. Okay. Reasonable is subjective, whether this cost for this particular organization and this particular project looks reasonable. It's so subjective that some big costs may look unreasonable, or may look reasonable for a bigger organization, and even a small cost might look unreasonable for an organization. So this is subjective, but you'll have to justify why it is reasonable, or as far as your stage or your status of your organization and your work is concerned. Consistence means that, you are applying the same, uh, the increase or increment throughout the grant period if it is a multi-year grant. For instance, consistent means there has to be consistency in terms of inflation. There has to be consistency in terms of number of units, unless there is a reason. There has to be consistency in terms of the unit cost. The unit cost cannot abruptly increase. The inflation cannot abruptly increase, is what is consistency. So the historical cost will become the basis for your first year budget. Historical cost जो previous slide में हमने दे रखा था, books में हमारे को क्या cost लगता है, that's a historical cost, and that historical cost will be the year one cost as far as your budget is concerned. But once you have done your first year's cost, how consistent you are in terms of the number of units, in terms of the unit cost, in terms of inflation, is what decides consistency in your grant budget. So these are cost principles as far as grant proposal or budget preparation is concerned. And I think we close it at this. And I now will just recap this for in a minute, and then we leave it for questions. But I want to say that from here, the last session, from the cost attribution or the understanding of cost or attributing cost to various elements, whether it's HR or travel, how do we go to the understanding the cost part of it? How do we bring the cost into the budget? And then pro- that becomes part of your overall proposal. And how do you then ensure that you are able to cover your costs in that particular for that particular project budget is the next session. So that will be a continuation of this session. A quick recap: we've understood what a grant is. We understood the facets of the grant, the features of the grant. Then we went to the concept of fund accounting. And from the concept of fund accounting, we went to the concept of to the various kinds of funds that not-for-profit organizations deal with. Are they in books? No, they may not be in rule books, but they are what we practice. So then we saw the various types of funds. And then we moved to the concept of cost. Having understood the various incomes, we then moved on to the concept of costs. We have seen what is the natural head of expense and the functional head of expense. And then we have seen how do we bring the functional head of expense, which has the natural head, into our cost formulation for budget, which is to cover the total cost. And that is direct cost, common direct cost, shared cost, and indirect cost or administrative cost or management cost if it is permitted by the donor. So that completes my session today. If so, I don't know,
Sir, can we ask
SNIRT.
one question?
Yes, go ahead, please.
Sir, thank you very much. You have given a wonderful example, and we are practically implement such concept. And the true cost really it is the well defined and well thought process, sir. My question is: the shared cost is a purely based on the actual expenses, or the percentage of agreed we can directly transfer from the grant account to our general fund? This is my question, sir.
So the question has to be answered by understanding that you need to first arrive at your shared cost. Now, the
Right,
shared cost will be based on what are the costs which your organization incurred, which cannot be attributed directly to any project grants. If you are running 10 grants, none of the grants will, take those costs.
right,
Those are called shared costs. Now, their
right,
shared cost is a certain amount X, and your total budget is your Y. So that becomes your percentage.
right,
That is your shared cost. So when you will budget for various projects, then you will have use this percentage, or you might use another percent. This is the overall percentage, but you can have various shared costs in terms of how much percentage you will be you are share you have on those various shared costs. For instance, on terms of rent, in terms of utilities, in terms of your HR cost, in terms of any kind of travel, you can work out what is your shared cost, and that shared cost can be charged over to that particular project in that particular relationship, and that can be recovered from that particular project.
okay, sir. I understand the shared cost. My question, straightforward question: can I generate the surplus from the shared cost?
So you know the answer is that when it comes to shared costs, the shared costs do not have an audit by the donor. So if you are able to get shared cost as a surplus, you definitely can take it to your balance sheet. Why? Because when the shared cost allocation is worked out, that time there were a certain number of projects.
Right,
But the
sir.
number of projects, if they go up considerably, then your shared cost is going to be the same, but your allocation to the number of projects will go up. To that
Right.
extent, and that shared cost will not be audited. To that extent, the shared cost can be a surplus in your income and expenditure statement.
Right. Thank you, sir. But actually, what the number of CSR organization are what they are saying, whatever the percentage they are agreed for the for example, generally all the CSR is giving you 5% or 7% of the total program cost as a share cost. But they are saying कि you need to give the supporting document to claim this shared cost.
Generally no, because the shared cost, you will not be able to give the document apportioning their cost in terms of this particular because we do not common direct cost we can apportion and we can show
Right,
that that was common direct cost, but
right, sir.
shared cost bifurcation in terms of each CSR grant not possible.
So that's why we are facing the problem, sir.
But you will have to explain it to these donors, to the CSR donors. CSR donors will say 5%, but you should not just stick to 5%. They may say our CSR policy talks about 5%. It may not even talk about 5%. Okay. So unless you have a clear understanding of the concept of shared cost, you should be able to bargain with them to give you the shared cost percentage which you are incurring for these for your organization. Now,
But even
as far as validation of supporting documents for shared costs is concerned, generally donors do not insist on shared costs being earmarked for their to show through audit that those shared costs were earmarked to that particular cost, particular donor. It is not there. There could be some test cases in which they can. So you can say, well, you might ask for a few vouchers or few expenses where you might want to test check and see whether the shared cost was apportioned to the extent that it was asked for by us for that particular expenditure. So I would not say give them the entire thing, but you can say, well, you can test check to see whether our shared costs were apportioned, were actually apportioned to our expenditure for this particular grant or not. This is what I would give as an answer.
okay, sir. Thank you very much, sir.
So some question is there, if we have not received funds in time, can we
Yeah.
utilize from, so you have unrestricted fund, which is general fund, which you can definitely utilize during the intervening period. That the concept of 85% utilization in income tax is only to give you that 15% to take care of any kind of contingency or eventuality, and how we reimburse from. So when the money comes, so it will be a grant receivable. You will show it as expenditures for that project grant. Okay, but the grant should have commenced. Okay, but your money hasn't come. So if it is on a reimbursement basis, you will show it as as a grant expenditure, and on the asset side, it will be shown as a grant receivable. When the grant money will come, it will go from, it will be recovered as cash, and your UF will get replenished again. That is how it will happen. Could you please give an example of common direct cost? Common direct cost will actually be common cost, especially for HR. Okay. So if you have a program director or you have a chief functionary who will give, who is a common cost, but who will give 5% of his time exclusively for your project, that can be budgeted as a direct cost in the HR cost and not as part of the shared cost, and recovered as a common direct cost. All right, questions if there are. These are the questions in chat. So if there are any more questions, there's another question from. Oh, somebody is saying it's a good, great experience. No, my question to, so please, I do not need any thank you. I only want to tell you that we have to change our way of thinking, not only ours, but also in the organization. So that's something that you'll have to see. Sanrakshan organization, can you just ask your question?
Yes, hi, sir. So just one clarity on this restricted and non-unrestricted funds, the grants which we release. So sometimes we do receive the unrestricted grants, but the donor will ask us the utilization certificate for a certain period of time. So can that be a corpus fund? So we can we put it that in a corpus fund and provide any kind of UC? So just wanted to clarify.
No. So if they give you a corpus, Okay, they can still ask you for what you did with the corpus.
Okay.
Corpus is unrestricted fund, but they will still ask you for reports. They will still ask you for financial reports. Suppose somebody gave me 10 crores as corpus fund. They will in the corpus letter clearly say that you please use this for whatever purpose you are using, but show us what is the income, what is the expenditure, how much was something that you replenished. If there was a replenishment, say out of 10 crores, whatever you got, 88% you 10% you put that on interest, then 15% of that 8% is something that you should replenish. Please show me whether you have replenished, what money you have spent, what is the income, what is the expenditure. That reporting you will have to give. That is still doesn't mean that unrestricted fund does not mean that there will be no reporting. There will be no condition from the donor, but there will be proper reporting and you recording and reporting as far as accounts are concerned and reporting to the donor is concerned.
Yeah, but at the same time, the corpus funds will not have the particular time, because sometimes once the financial year gets over, we need to have that formal letter with the funding agency that we are carry forward with the funds, right?
No,
So how does that work?
that carry forward of funds is not even required, because for corpus it is not required, because I said it is generally non-refundable. Okay, they will not specify the period, so you don't have to go back to them. In
Okay.
case of you want to reduce the corpus because of an emergency, that's a different matter. Second thing is that as far as grants are concerned, which have not been utilized, you might have to go to them and say, well, these are the unutilized grants and they are showing on the balance sheet, and these unutilized grants will be utilized in the next year. That is between you and the donor. That's how it is. You don't have to go for permission to utilize the unutilized grant or the corpus fund.
Okay. Yes, clear, sir. Thank you.
Sharaji, this is Sanjeev Sharangi.
Go ahead with your questions, Sanjeev.
So, from the shared cost, if we generate some surplus at the end of the financial year, can we treat
You can treat it as a general fund. I can't hear you now, but what I'm saying is that you see, generally, there will be practically a situation where whatever is the shared cost that has been given to you, if the number of donors increase and your donor base increase, then and because of the timing factor, there might be a situation where whatever is because your shared costs in a certain sense are constant, whatever they are for that particular period of time. If there is a surplus, definitely that money can be shifted to general reserve.
Yes. Yeah, my intention is, for example, the shared cost has been calculated, but you don't know the number of programs will be onboarded that financial year. Maybe you are targeting for 20 projects, but you are able to onboarded 30 projects. In that way, the shared cost calculation might have been changed and some surplus might be generated.
Hmm. It should not be much. I mean, honestly speaking, it will not be much, even because it's a continuous flow. So the amount of money may not be, but there can be a certain discrepancy what your estimations are and what your actuals are.
Yes.
Because the direct cost will be fairly constant cost. I mean, they'll be firm. There'll be definite numbers, and those will have a unit cost. But here there can be variation based on the number of donors that get added during that year, because the shared cost is historical, based on historical data.
Correct. Thank you. Thank you so much.
All right. So if there are any questions, you can still put them on the WhatsApp. I haven't seen questions on the WhatsApp for sure. I will share all this with you, and we'll continue this conversation from costs to budgets in the next session, which is also the last session for this particular batch. And I hope we have been able to help you with understanding the framework for grant management for not-for-profits. We will do the budget and we will do the various conditions of the grant, what all that means, and the tips for grant management in the next session. These are curated by me, and they are not specifically available in the form of of ready resource material anywhere on net. So please keep them, refer to them, practice them is what I would then suggest. Help your organizations practice them. That is how the organization will evolve and go to the next level. So thank you very much. Have a great weekend, and I will see you on the 17th, which is our final session for this batch. Thank you very much.